Great. Right, so 3, 2, 1. It's Monday the 10th of September 2012. Welcome to this weekly review for the Forex markets presented by WMD from WMDForex.com. And we're just going to take a look through a handful of charts this morning, analyze lines and levels which would present potentially turning points as far as price structure is concerned in the markets, looking for those swing levels and trying to anticipate the general direction of the market. We're going to start off this morning by looking at the USDJPY. USDJPY has been locked in consolidation for quite a while now, over a period of a number of weeks, and she moves 60 pips up, she moves 60 pips down, 60 pips up, 60 pips down. And one of the things which we have to learn to do as traders is to recognize when the market is going into a range. That is often the time when a lot of people end up getting hurt, and we want to make sure that if we enter into a trade on a pair like this, that we have a reasonable trigger. All right, that is what it's all going to be about. So we want to have a reasonable trigger. What would the triggers be here on USDJPY? For the time being, I'm looking at two areas. The first is a lower support wall, and the second is a downtrending line, which is holding the price as far as the current momentum is concerned. So she's locked into a very tight consolidation here. If it happens that the price is able to break through that consolidation, so we get a break of the trend line, we'll have a nice clean trend line break on a retest. We can expect for the price to start breaking north at that moment in time. Or if it happens that she breaks through the lowest support wall at that point on a pullback, we can look for continuation to the downside. The strategy for the time being is to stand aside and to wait for that breakout. That is really, really important right now with this pair. If you get involved too early, you could very well find yourself on the wrong side of it. It is always a lot safer to wait and let that momentum develop. I like the idea of BOJ intervention, but when it comes to intervention, if we're comparing the BOJ against the S&B, then the S&B have shown that they've got a hairy chest and they've got hairy armpits. The BOJ, they do intervene, but we haven't seen that intervention being sustained at all, right? So when they push and they start getting active in the market and they're intervening, you start seeing some rallies, and after a while, those rallies start fizzling, and once they've fizzled out, they've pretty much gone, right? So if we do see that break, if we see that momentum develop, at that point we will be prepared to give chase to it. For the time being, if we're zoomed out here on the screen and all we can see is this momentum to the downside, and after that momentum to the downside, she's gone sideways. Ordinarily, it's a lot safer to be looking for a continuation, to be looking for that momentum to develop, rather than to be chasing or anticipating that you're going to get that reversal. So if we're going to go for a reversal trade, that's going to have its trigger. If we're looking for continuation, again, that has to have its own trigger, and we've got both of those marked. Both of those marked on our screens as she stands at the moment. Okay, let's turn our attention towards the EURUSD. Looking at the EURUSD this morning, we saw quite a healthy momentum develop the tail end of last week. We had that NFT news announcement, and she gave quite a strong break north. We had a broken trend line on the EURUSD. Now, I've been looking at this EURUSD and I've been thinking a lot about it, and one of the things which came to mind with the EURUSD at its current price is that it's not a case of where you would buy, but where you would have bought that would make you happy right now, right? So although she's rallied, would it be wise to be buying at the current price, or would it be better to wait for a pullback? And I would say that at the current price, you're better off waiting for a pullback, and I'm just going to show you the reason why. If we're looking here at the left-hand side, we can see when the price fell down, she pulled back and she established a resistance, and then she continued. So we have a resistance which has been established here. If we're looking at the price where it is at the moment, she's pulled back to that resistance level, and she's currently being rejected from there. Also, we can if we take our lower support wall and we just copy it higher, and we copy it higher, what we'll see is that actually she's striking the underside of that support wall, or she's not very far from it right now, right? So so as far as the Euro USD stands right now, there is some momentum which is behind her. She's carried on breaking north. That's all fine. We've had a broken trend line. That's great. But support does not come. If we're looking for support and we're saying, look, we're support based upon the current price structure, you'd be seeing support around that 2640 area, which is near enough the breakout price. And we did discuss last time the importance of that breakout area when you have a trend line break. Nothing is more important than the breakout price. And as long as she remains above the breakout price, you'd say, okay, it's a technical long, but we're 100, 140, 150 odd pips away from that right now, right? So if we're looking at the local time frame here, we're up on a H4. If we drop down to a local time frame and say we drop down to an hourly or something like that, I guess what you've got to be looking for is for some kind of support structure to be established. What would a support structure look like? The support structure would look something like this. If you see a support structure being established, that is the moment at which it would become easy to get excited. It would be easier to get excited at that time, because that is what will give you risk definition if you're looking to chase the Euro USD north, or if you're looking for the momentum to continue in that direction. That is what will give you the risk definition, and it will allow you to get into a trade. Until you see that type of structure develop, it's going to be very difficult right now. You've just got to be watching the direction of the day, possibly keeping an eye on the direction of the week in order to establish bias. But from a structural point of view, we have nothing right now. The nearest support structure that we have is way away. So we're going to be watching her on the local time frame, saying, okay, are we going to get a support structure established? If a support structure is established, at that point we can start getting a little bit excited about the Euro USD and saying, okay, we've got risk definition to be looking long. Similarly, if we see support structure being established, it'll be that same support structure. If we're looking for the downtrend to resume, we'd look for the price to break down through that support structure and pull back. We'd find that same area flip and to give us resistance. And again, it's going to be about the risk definition on this trade. So it's very early to say about the Euro USD right now. She's pushed right through and to a resistance level, and I want to see some support structure being established before I get excited about further rallies north. We do have some event risks this week, some quite considerable event risks. In fact, on Wednesday we have the German court ruling about the ESF, and I think that is going to be a very, very big deal. And not only that, but on Thursday we have the Italian 10-year bond auctions, and the market has been watching those very, very closely to see how much guts the ECB wants to display, how much she's prepared to intervene and to work in order to cap those rates. So people will be keeping a very, very close eye on that. So like I said, we've got some event risks. As far as where the price is right now, it's not the best place to be buying at. Like I said, if you bought at the right place, you'd be smiling right now, but whether you'd be buying at the current prices, I think that remains to be seen. It really is going to be a case of waiting and watching and wanting to see that support structure established before you're able to take any firm steps on the Euro USD. So we'll be keeping an eye on that weekly opening price, and we'll be keeping an eye on the direction of the day, just waiting to see the direction that she wants to break in before we take any action on this. Okay, let's turn our attention towards cable. Again, it's a very similar story to what we're seeing on the Euro USD. Over the course of the last few weeks, we had marked this area for a support resistance split. That comes in around the 57.40 area. The price broke higher, pulled back, found support at previous resistance, and ended up breaking higher. She established resistance again at around that 59 handle, and that is the area which is defining the long trend now on cable. So as long as the price is able to remain above 59, technically a case remains intact for a long trade. But if we're looking at where the price is right now, the area that she's coming and hitting previous support at near the 60.50 area, and she seems to be rejected from around there. So again, it's very much a case for caution. If we see on a local time frame, again, I'm here on the H4, if we see on a local time frame support being established, at that point, it would allow us to have reasonable risk definition to look for a continuation north. Otherwise, if we see support resistance flip, that will give us an entry south, and would assume at that point that the bear trend is resuming on the cable, right? So for the time being, you know, the wind is still in the sails. It's still very much behind the back of the bulls, but we need to see that support structure established in order to get a risk defined entry. See, so you know, it's not just about being able to see the direction of the momentum. You need to get good risk definition in order to get in on a trade. Sometimes that can mean missing a chunk of the move, but it's really not a big deal because we want to get it right, rather than to find ourselves in a trade with really wide stops, risking a lot more than we can afford. So that's how things stand on the cable at the moment. Right, let's turn our attention towards the dollar Swiss. The dollar Swiss, again, very much between a rock and a hard place. The last time we looked at this, it was about the downtrend line, and we said as long as the price is able to remain below that downtrending line, our bearish bias would remain intact. She has continued to break down, which has been great, but again, if we're looking at where she is now, and here it's some analysis on the wider time frames, but as she moved up, here on the left hand side, we can see she pulled back, established support, and broke higher. From a technical perspective, as long as the price is able to remain above that support block, you would expect for buyers to get active in that area, right? So it's not about the dollar Swiss isn't about selling right now. It's about where you sold. That is what would make you happy. Otherwise we can very much suspect. We've seen this area acting as support on a number of occasions before, and we can very much suspect support in this price area again. It's going to be a case of dropping down to the local time frames, deciding whether you're a buyer or a seller. But certainly, if you're selling, you don't want to be selling as she is hitting a support area, right? You know, it'll end up being one of those trades where you sell and then you're regretting it from the moment that you click that button. So it's the worst thing that can happen to a trader, right? You know, you hit that sell button and straight away she starts moving in the opposite direction. It starts by being a -10 and then it's a -20 and you're going, oh no, and then it's a -30 and you're thinking, crikey, right? So just be very, very aware of that. If you're looking to get involved in a bearish trade, your best risk definition is going to be near that downtrending line. Okay, if you're getting in around there, it needn't cost you more than 25-30 pips in order to find out. And if the trend line is holding it, you know that's your best risk definition. If the trend line is holding it, but where she is right now, I would rather see some resistance structure being established. If we're getting a resistance structure established, that is what will give you risk definition. On the dollar Swiss. And again, if you're looking for that reversal trade, it will give you risk definition on that reversal trade for the dollar Swiss. So she's at a quite important area. It's not a price that I would like to be selling at. I would exercise caution at this particular level. If it happens that she starts breaking down and we get another burst of momentum, then it would be fair to give chase at that moment, but we're not seeing that right now. Again, keep an eye on the weekly opening price. If she's below the weekly opening price, it would be fair to have a bearish bias, and if she's above the weekly opening price, then be exercising caution if you are a bear and looking to chase the most recent momentum that has developed. Again, there is some event risk when it comes to the Swissy. We have the SNB meeting on Thursday. The SNB, they have been known to show some grit when it comes to intervening in the markets. The dollar Swiss, pound Swiss, and especially the euro Swiss bear testimony to that. And so we should expect around that time for some volatility to develop. Volatility is always good for making money, provided you end up being on the right side of it. Okay, we've got FXDV Int asking whether that implies USD bullishness in the short term. When it comes to trading, there are a couple of kind of principles which you need to have in mind, right? There's just a few principles which you need to have in mind. First of all is that you need to establish a bias. Once you've established a bias, you need to define risk. Once you've defined risk, you're going to be in a position to pull that trigger. As far as the most recent momentum has been concerned, across pretty much all of the dollar crosses, we've seen that momentum has been against the dollar. So for example, if we're looking here at the dollar Swiss, and you would be looking at the inverse of that on the euro and what have you, what we're seeing is resistance being established. So the price, the price falls, makes resistance, falls further. She makes resistance, she falls further, right? If we're going to start looking for entries, and the purpose of this session is more about just identifying the key levels, but if we're looking for entries, if we're looking to be buying, we want to start seeing support structures being established. If we're looking to sell, we want to start seeing resistance structures being established, right? That is the overall rule. As far as the levels that the price has reached and the most recent momentum that we've seen developing, the most recent momentum on the dollar Swiss has been to the downside. What it means from a rational perspective is that you ought to be looking at selling. The issue is that should you be selling at the current price? That is the issue. And so what I'm warning is that I do not want to be selling at the current price. I don't want to be selling at the current price because she's going and hitting support on a wider time frame. If I want to be selling, I want to be selling at an established resistance, or I want to be selling near that downtrending trend line. And those are the areas that would give me the best risk definition.